Do you think the market's right to be skeptical that OPEC might be able to even meet what they pledged that they would do?
Well, we have to be reasonable. The expectation that suddenly OPEC can unleash millions of barrels per day of additional oil and take care of the self-sanctioning issues which are taking place particularly in Europe, that's an unreasonable expectation. If OPEC decided to, say, add 1.5 million barrels per day instead of 648,000, then 1 or 2 months from now, when the demand comes back, then they have no additional capacity to put in. Basically, OPEC cannot replace Russia. That is the bottom line. And no matter how many ways you cut it, 7 million barrels per day, 7.7 million barrels per day exports from Russia cannot be replaced by OPEC. There is no two ways about it.
So that is in a world already tight that China is buying less and consuming less. Dr. Fesharaki, what happens then when all these stimulus measures that Beijing is putting in place start to work? Does the world have enough oil to account for a recovering China?
The answer is no. You don't have enough oil. You would have a supply issue. And the sort of elephant in the room that we did not discuss is what's going to happen to the Iran sanctions issue. Iran sanction issue, Iran can bring in 1.5, 2 million barrels per day of oil to the market within 3 months, but has 150 million barrels per day of oil sitting on the inventory on land and in sea. That can make the market change very much, but time is running out. If the Iranians don't sign an agreement with the US in June or July, August is the time for recess of the Congress, and September the campaigning begins, and by midterm elections, the Democrats will definitely lose 1 or 2 houses of the parliament, of the Congress. So you have to have a deal in a month or two, otherwise things will get even worse than they are today, and the prices will go higher.
Dr. Fesharaki, I mean, they've got to be pleased, these oil producers, with the oil prices where they are. We've got a chart, which we just showed a second ago as well, about how these Gulf producers are trading well above their fiscal break-evens. And so the question is, why would they want to rock the boat?
Well, you know, I know for sure from conversation with the ministers, high-level people, nobody is happy about these prices of high, because that high level. They think that it speeds up, move away from oil. They see demand destruction. Everybody is happy at about $90 a barrel of oil, which is the price of oil would have been. If there is supply-demand fundamentals, which we look at the moment, the price would be 85 to 90. We pay $30 extra because of animosity with Russia. And we're not making the Russians poorer. The Russians making more money than they did before. So it is basically, I think, fundamentally wrong policy to self-sanction or to cut Russian oil because there is no oil to replace it. You cut their supplies from Russia, the price would have to be $140, $150 a barrel. If that's the price that the Europeans want to pay, it's fine, but the rest of the world would have to go the same way because of what the Europeans want.
Dr. Fesharaki, what's really happened with shale? It was almost at one stage the swing production element here. And could there be a big upswing in shale, for instance, which might be able to actually take some of this, the heat out of the price?
Well, before the pandemic and before the Russia crisis, we had expected shale to continue for another 2-3 years of growth and peak by 2025. So this year, 800,000 barrels per day of crude and 400,000 barrels per day of NGLs. Basically, 1.2 million barrels of liquids will be added. Next year, maybe 1 million. But this is not something that we can continue to see growing. Maybe another 2024, another million, and that would be the end of the road. They would be reaching a peak. At these prices, you have 40-50% rate of return. So everybody doing maximum of what they want. Only problem is that there's too much share buybacks taking place, which is actually taking away from the upstream investment potential. But there are limitations on shale. There is, on the gas side, there is no limit, but on the oil side, there definitely are limitations.
Dr. Fesharaki, just your your outlook here in oil prices, not just this year. Let's look 2-3 years down the road. Is there a high likelihood that oil remains north of $100, given everything that you laid out for that for us these last few minutes or so, remains above $100 these next few years?
I think that if you want to sanction Russia, and so far the sanctions have not worked very well because Russia is not exporting, but if you put into place insurance constraints for carrying Russian oil, then you can really shut in Russian oil in a big way. And then you would get prices very high. So yes, the prices will be north of $100 as long as this battle with Russia continues. As soon as the issues with Russia are resolved, then you would get substantial lower prices. Now, if a deal with Iran is done, then you could see $10, $15 drop in the price of oil right away. But if the deal with Iran is not done, then you have another impetus for higher oil prices.